Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Hello, natural gas friends. Looking at the hourly time frame, so we had that nice higher low, higher high pattern as we entered today. This morning, we saw yet another two rejections from 3361. This is the level that I have been talking about for a long time. Multiple rejections now. 1, 2, 3, 4, 5, 6, 7 hourly candlesticks rejecting from that level or within 0.3 of a penny of that level. We consolidated, formed another higher low, nice stair step pattern. And then leading up into the inventory report, we broke that 3361 resistance. That was a little bit of a heads up of the bullish action to come. Personally, that wouldn't have been enough for me. I would have liked to wait to the initial reaction off of the inventory report, but we could see it was certainly a bullish reaction right out of the gate, and we saw a nice upside to 345. Now, how did we find resistance from that point? I was looking at 345 because I zoomed back to previous price action. And I say, okay, where did we see resistance? We had the dump, the gap down open. We bounced off of 340, and the high of the bounce attempt was 3506. We pulled back. High of a little bounce attempt here. 3455. I was looking at 3455 resistance and then 350. We ended up topping out at 345, a little bit lower. So then we pulled back and we were looking for a bullish entry because this consolidation looked normal and healthy after the breakout. Where would be a good target? Well, where was tough resistance? 3361. After rejecting that many times, which certainly assumed to hold that on the first support test. And here we go. We bounced down or dropped down to 3364. 0.3 of a penny within that support. Now we'll see how much upside the bulls have off that level. So far, over 3 cents. Over a percent move off of that support. 3361 needs to hold here for the bulls. And we'll see if we get continuation to the upside back towards 345 resistance tomorrow. Daily time frame. Nice follow through for the bulls. You can see a clear break over that resistance. It's now support. 3 green days in a row. And how does that shape it up here on the weekly time frame with 1 trading day left to go? Solid bullish reversal candlestick, maintaining the higher lows of the longer term uptrend line, and we need some follow through next week with another green week showing confirmation of this bullish candlestick. So all about 3361 support overnight and into tomorrow morning, and 345 resistance followed by 350, nice psychological level. So that's what we're looking at here. Let's see if UNG closed over its moving average resistance. We were right at that level and we did not. So that level is 846. We got a clear break of the 50-day moving average resistance, which rejected the price 4 out of 5 times. Now we have to deal with the 100-day moving average resistance. And if we break 863, there's a lot of space to fill this gap. We rejected at 861. So 863 on January 3rd was the high. Now we look back and say, what was the high of January 3rd for natural gas? And guess what? At 3506 level. So that's going to be a key level going forward from here. So I appreciate you watching. We'll check back in over the weekend as always to wrap things up and see how the bulls were able to close. And we had certainly had some people making a bullish entry on 3361 support. And if we lose that level on the hourly, if an hourly candlestick closes below it, that could be your exit signal. If you wanted to give more room, it would be this support down here, the higher low at 3297. I appreciate you watching. See you in a day or two.